Market Overtime. I'm Nicole Petallides on the floor of the New York Stock Exchange. My guest today is household name in the world of personal finance. She's written 10 consecutive New York Times bestsellers, a 2-time Emmy Award winner, has been on your television talking about personal finance since the mid-1990s. And now she is host of the Women and Money podcast. Let's welcome Suze Orman. Thank you for being here on Market Overtime. It's a pleasure.
Thanks, girlfriend. It's a good day to be here when the markets are doing well, don't you think?
We have seen, look, on Monday, June 17th, the S&P 500 had its 30th record close of the year. So we'll take it, and a lot of folks are feeling optimistic. In fact, you told me you're an absolute bull. Why?
Yes. Well, for many reasons, which is I think the economy is doing fine and everything, but technology today and the areas to invest in, it's not like the tech of years ago where it would come and go. Now we're talking about, in my opinion, true transformative investments in AI and companies that support that. And it's not just a computer. It's not just software. It is a transformative time for investing. So I just think it's going to go on and on and on, to tell you the truth.
Yeah, absolutely. And I want to get to retirement planning and personal finance, and maybe if you're a new couple, some of your advice there. But, you know, you were quoted back in October on television. I saw that you had Shopify, Microsoft, Amazon, Palantir, Broadcom, and those were all winners. They've been winners. And you and I talked, and you said you like names like Apple and Nvidia, for example, Coinbase, Walmart, Tesla. Are those names that you like?
I love all of those names. You know, I don't think it's unusual that you won't see Microsoft at 500. I think you could easily see Palantir at 50 on its way to 85. I think that, I mean, Nvidia, there's no reason that it shouldn't be a $230 stock. That, you know, you have Broadcom that's about to do a 10-for-1 split. Are you kidding me? These are all companies that have a lot more room to run.
Yeah, understood. So let's turn to what people know you best for, and that is you're a personal finance expert, and you're very true to folks. Let's just start with a couple that's getting together and what they should know before they even think about marriage. What should be some of the tips that you have for them?
You know, the truth is 1 out of 2 people who get married end up in divorce. And the #1 reason for divorce is arguments over money. And you may think that M just stands for marriage, but it also stands for money. So all of you have to ask yourself the question, how much do you know about the person, financially speaking, that you are about to marry? You have got to be as financially intimate with that person as you are personally intimate with them. You have to know their habits. The same way personally, it's like, do they leave the toilet seat up? Do they put the bra on the doorknob? Whatever it may be, you have to know, are they in credit card debt? What are their spending habits? What are their FICO scores? Are they a saver or a spender? You have to know, because if you think that their financial habits won't bring you down, or your financial habits might not bring them down, then I have a bridge to sell you. So you really have to get honest with each other before you decide to say, I do.
Yeah, that's fantastic, right? See how many cars they have in the driveway, maybe some new dresses or suits, electronics, things like that were some of the things that you've spoken about. And when it comes to FICO, what's that quote of yours? FICO first something? What is that?
Oh, FICO first, then sex. That's a quote of mine, which is, you know, so many times we get involved with somebody and we really become at first in a state of lust, in my opinion. Sometimes we call it love, but it's really lust. So before you really get into that state where you think everything's great, you're gonna marry this person, I'm in love, whatever you want to call it, you better sit down and have a talk
Right.
with them and check all of your FICO scores, look at all of your credit reports, really, and what is going on financially speaking with that person. Do they have a lot of debt that they've just defaulted on? All of these things, you need to know about it because their financial
Sure.
life is going to become
Yeah, and
yours when you get married. Yes.
right. Yeah, yeah. And on your podcast, and you said everyone's smart enough to listen to the podcast. It really is geared towards everybody. I mean, women were always the focus, but it really is for everyone. And one of the things you really talk about is saving. You have securesave.com. You've promoted employer-sponsored accounts for saving. You worked with Humana. You talk about these different ways of saving, but securesave.com and how to save yourself from emergency. These are really important to you, right? You've seen too many
Yeah, it's
unfortunate
right now,
stories.
if you did a survey, which we've done many times, of the majority of people in the United States, 60 to 70% of you don't even have $400 in cash in case of an emergency. So really, when you think about it, the world isn't really set financially speaking on that level. That doesn't mean that the economy's not okay and things are okay with the market, but on a personal level, many of you are not okay. So besides the fact that I co-founded a company by the name of Secure Save, and you should all look it up at securesave.com, it works with your employer to offer the very first employer-sponsored emergency savings plan for the employees. So just like a 401k or a 403b, this plan works where you designate how much money per paycheck you want taken out. Maybe it's $25 a paycheck, and your employer matches it. It's your money. You can access it anytime you want, and it's a fabulous thing. And we've been doing this now for 3 years, and major corporations have signed up for it. A lot of people, they put in $25, the employer gives them $3 a paycheck, and on and on and on. And so I've been doing that for a long time, but I've also been doing it with the sponsor of my podcast, which is Alliant Credit Union, where if all of you went to myalliant, ALLIANT.com, I have what's called the Ultimate Opportunity Savings Account with them, where you put in $100 a month, and you do so every month for 12 consecutive months. They will give you $100. So for those of you who don't have a savings account yet and you really want one, fabulous way for you to start. Plus, the money's earning 3% while it's sitting there. And if, hey, you can't complete it, it's still your money. Check out myalliant.com.
Yeah, thank you for that. You got to start somewhere, and that adds up to your point. What would you count? I saw at one point you had said for emergency savings, you should have 12 times your monthly spend. Is that about right? Tell us, for an emergency account, what do you want to see in there?
So a true savings account for you in case you lost your job. Not like your car breaks down and but you've got sick, you lost your job, you've been in a car accident, and you're not going to be able to work, or there's a pandemic, or it's 2007 and everything is shut down, and now you've really lost your job for a long time. It usually takes 8 months to 1 year for you to find another job. So you really need a 12-month savings account that is just for that.
Okay, all right. How about, let's talk about your planning. I mean, it's better to start young. This generation starts, 19, 20 years old. Back in yesteryear, we started at 30 or 35 to start saving money. What do you tell folks for retirement planning? What should they be doing? I mean, it's such a broad question, Susie, but what would you say would be sort of the 1, 2, 3 of this?
The sooner you begin, the better, because the longer your money is invested, the more that it compounds, the more that it grows. A very simple example of this is you're 25, you put $100 a month in every single month into a Roth IRA, which is the only type of retirement account all of you should have. A Roth IRA, a Roth 401k, a Roth 403b. Will all of you just forget the tax write-offs? It is not worth it. And if you don't understand why, you should listen to the podcast episode, Don't Be Partners with Uncle Sam. And trust me, you will never have a traditional retirement account again, which is before tax money. You get a tax write-off. But you put $100 a month into a Roth IRA and you do it every single month for, 1 year, 5 years. You do it all the way till you're 65. 40 years
right.
with the 12% annual average rate of return, which is not impossible, people. If you look at what the markets have been returning over the past 5 or 10 years, it's like 14%. But just for an illustration purpose, you'd have $1 million. And that's at just $100 a month. If you wait till you're 35, you'd have only $300,000. So those 10 years cost you $700,000. Do not let them pass.
All right, so start early and get into Roth IRAs, Roth 401ks. We did talk briefly about bonds. You could save your money using treasuries and building a bond portfolio as well. But I'm curious to know about annuities. That's something that you actually said on one day, variable annuities could be draining your savings. Some people love annuities, some people don't. What are your thoughts there?
Listen, if I were to have a top 10 list of things that I hate for people to invest in, variable annuities would be at the top of that list.
All right, so we made that clear, right? I love how you never hold back. When you think about AI, it's an exciting way. You use it, even you said you use programs. You have your own trades and you're a professional broker. You worked at Merrill Lynch, but you use it and double check things, for example. But where does AI fit in our society? You're concerned about unemployment, for example.
Yeah, I'm really concerned about unemployment because AI, in my opinion, very well could eliminate more and more jobs as it gets more and more sophisticated. The less jobs that we have that are paying into the tax system, the less money that's paying into the Social Security system. So eventually I think AI will have a dramatic effect on people's lives as well as Social Security, as well as our tax debt that we owe. The government owes so much money, it's not funny. How do they pay that debt? Usually by people's income tax. That could all disappear.
You said in 5-10 years we could be upwards of 30% unemployment. Is that right?
We absolutely could. I don't know if we will be, but anything today is possible.
Yeah, understood. When we look at other areas, I'd love to ask you about real estate. It used to be, it was tangible, you understood it, you knew what you were getting, but you said watch out for the costs that you didn't realize. I mean, right? Well, now everybody's looking at the higher mortgage rate, but there's something else.
You can still buy real estate certain places and all, but can you afford the insurance payment on it? You have a place like Montauk, where climate change has changed it. The water's coming in. $10 million homes now, good luck selling them for $500,000. That's one thing you have to worry about. So where are you buying? The next thing is, can you afford the insurance for that house? I have a very small, in Florida, condo, 2,100 square feet, $28,000 to insure it. I own it outright,
right.
Blah, blah. But how many people can afford, besides a mortgage payment, besides maybe HOA fees, $2,000, $3,000 a month for insurance? Be careful, everybody.
So at this point now, I start to think if someone had 10,000 or 1 million, I was going to say 10,000, 100,000, 1 million, 10 million. What would you tell them to do with the money? Because it sounds like you have equities in here, you have some bonds, you have the Roth IRA. I mean, are there certain sectors you would lean towards?
There's no way for me to answer that, because does that person have credit card debt? Is that person older and they still have a mortgage? Does that person have debt on their car? What is that person doing? So do they have student loan debt? So it just depends. Obviously, if we're talking about people who don't have any debt, if we're talking about people who maybe their only debt is their mortgage payment, maybe a car payment that's a legit car payment, meaning a short one, and they are saving full time for retirement and all of that, listen, if you want to invest in the market, great. The best way to be investing in these markets is through dollar cost averaging. I would not be taking a lump sum of money and just investing it and just buying something. Like before, we went on to tape this segment, I was telling you that I bought more of my positions today. I designate a certain amount of money that I want in an individual stock or ETF, but I don't put all of that money in at once. I buy some, then later on I'll buy more. If I still like it, I'll buy more. If it goes down and I like it, I really buy more. So I usually dollar cost average into a position over a year period of time. Now with slices, ETFs, there isn't an excuse that all of you can't be investing. You absolutely can if you're out of debt.
And on the finance side, this is my last question, and that is about estate planning, trusts, inheritance, passing down wealth. What are some of the things that you make sure to tell folks?
Listen, one of the biggest mistakes people make is that all they think they need is a will. In my opinion, if that's all you have, you are going to be making one of the biggest mistakes out there. You have what I call the must-have documents. You need a will, a revocable living trust, an advance directive, a durable power of attorney for healthcare, as well as financial power of attorney. If you are out there and you do not have all of those documents, I'm here to tell you, you absolutely need them. Now, I have a company that I love that has created these documents. And so if you go to musthavedocs.com, you can get $2,500 worth of state-of-the-art documents currently for $99. They've sold tens of millions of them. People love it, good in all 50 states. So for those of you who don't have enough money to go see an attorney and pay $2,500 or $5,000 for it, or even if you do, you might just want to check out musthavedocs.com. They are fabulous.
Okay, thank you for that. One of the names that you mentioned in our conversation was Coinbase, a name that you like, and it made me think about your thoughts on digital assets. And we've seen Bitcoin, and Bitcoin held its own during some of the fraud and trials. It was impressed folks, while NASDAQ had more volatility. I mean, it went up to 75,000 or so. Is that something you're interested in? It wasn't there in yesteryear, but it's certainly gaining traction, particularly now that the ETFs have been approved. Tell me your thoughts on Coinbase or Bitcoin or digital assets.
I've always liked Bitcoin for investing with money that you can afford to lose. Because nobody can really explain it, nobody can understand it, nobody can really see it. So for those of you who are in a position where you have some money that you can lose, then I would absolutely tell you, especially now, where you can buy an ETF like IBIT, or if you want to buy an individual stock, I personally like Coinbase, especially since it's down right now dramatically. But I like that area. I think there is potential. Right now, as we speak, I think we are in absolutely a pullback on Bitcoin. I think you could see it to go to its support area, which is in the 60,000, and then possibly base there for a while. And then long term, still bullish, where it could go up to 70 some odd thousand, which is its resistance level. If it breaks through there, I think it can run, but again, only for money that you can afford to lose.
Yeah, I think that's a great sort of put that caveat in there just in case, because people might get a little too risky with that kind of asset when they look at digital assets and crypto.
Yeah.
Something else that you and I discussed, and that is know what you're investing in, because for example, when you looked at ARC and Cathie Wood's ARC and you looked at it over time, it's not something that you're interested in right now. You're more in a wait and see mode on that, and that's something very popular. People like to look at. What is it that sort of puts you back or puts you on pause for that?
I'll tell you, I still am one of Cathie's biggest fans. I think she's brilliant. I think she had a year where her mutual fund, her ETF, absolutely went through the roof. But since then, she has not performed. And she has not performed in a market that can go up 25%. In one of the best stock markets we have seen, and even if the stock markets move right now, is mainly being, scurried along with the Nvidias and the, those types of stocks. Doesn't matter. She sold out of some stocks that then absolutely skyrocketed on her. So I bought into the ticket when she said, just wait, I'm buying for the long term. This isn't just for a year. This is for 5 years from now. Well, it's been a number of years. And it has not performed. Why leave your money in something that is not performing? And when I say not performing, it hasn't performed for a year, 2 or 3 now. Why do that when there are so many things that you can invest in that are seriously performing? Makes absolutely no sense to me. So I would, if it's especially outside of a retirement account, I would sell it, take a loss, take that money and put it in something to make up the losses that you may have. That's what I would tell you.
Understood. And you said, you respected her, you saw what she did.
And I still do respect her. I love her. I just don't, I'm not a fan anymore of investing with her.
Yeah, understood. Let's move it up a level to some of the huge leaders of some of the big companies. Jensen Huang, Tim Cook, Elon Musk, visionaries, leaders, powerhouses. Tell me about some of these people. Are they inspiration to you? Do you have a lot of, interest in any one of them?
Yeah, so they're not an inspiration to me because they are who they are. I admire what they're doing for the world. I admire what they are doing for people, and especially the portfolios and things like that. And what they're doing, they're brilliant. They're like the Einsteins of today, so to speak. But that's not something that I'm inspired by. You know what I'm inspired by? I'm inspired by people who used to live in their car. They had absolutely no money. And little by little, by getting out of debt, getting a little job even, doesn't have to be a big job. They saved a little money, they changed their ways, and today, 20 or 30 years later, they're multimillionaires. I'm inspired by people who never thought they'd have any money, and after listening really to the Women in Money podcast and the Suze Orman show, they write me and they tell me how great they're doing. That's what inspires me.
Yeah, I love that story, and it's sort of, as we talked about, it's your own story too, in that you were a waitress and you were born in the south side of Chicago. You were making $400 and, had some money
until the age of 30,
to start a business. Yeah, and you were given some money, but there was a broker who maybe didn't do a very good job, and then you sort of took off on your own and said, I'm going to really, become a broker, and you became a powerhouse yourself at Merrill Lynch and so on and so forth. It's a really inspirational story. I think I would love to hear how you tell people to pay off debt. How important is it to pay off debt?
Seriously important, because debt is bondage. And you'll never have financial freedom if you have bondage. And if you have credit card debt and all you can do is pay the minimum payment due, that debt is going to grow and grow and grow. So if you really want a life, a financial independence, a financial freedom, you cannot have debt. Just that simple. It's also a sign that you are spending more than because you want to probably impress people. So I've noticed that when people feel less than, they spend more than. So credit card debt is a true sign that somewhere your relationship with money and other things around you is not going well at all.
Yeah, that's really an interesting concept, right? I saw somewhere they said, to ask yourself when you're buying something, if nobody were to see this, would I buy it, right? And that goes into that category, right? Understood. Just finally, as we move on to the end of this, what did I leave out? Is there anything that you want to make sure we know?
I think what people really need to understand is that personal finance is as important as what you are investing your money in. So personal finance, which is what the Women in Money podcast is all about, is what are the things that personally affect you? Should you have a will? Should you have a trust? Should you have a 529 plan? Should you have a Roth IRA versus a traditional IRA? What kind of mortgage should you have? How do you hold title to your mortgage? All of these things that come into play that affect you personally, that have to do with money, but it's not about what stock should I have, what mutual funds should I have. So you have to make sure that besides what you do with money, on that hand, you have to know, have you set yourself up correctly so that when you do make money, you get to keep it? Because if you haven't set yourself up correctly, personally, trust me, it will all go down the drain.
Yeah, get that financial house in order. Just quickly, one other thing that you and I discussed on the phone call, and taxes, Social Security, these are changing, and you're concerned the tax brackets may change going forward because of the U.S. debt. Also, Social Security was something that had some uncertainty. You said it might be pushed out. You may have reduced benefits, things like that, that people may be counting on.
Yeah, they probably are counting on them, but you have to be very careful today. As many of you know, in just about 10 years or so, Social Security is projected to go bankrupt. So then what are they going to do to fix it? In the same way that full Social Security age used to be 65, and one of the ways they pushed it, full retirement age for Social Security now is 67. Chances are they are going to move it from 67 to 70. They may make more of your income taxable, because after a certain level, Social Security isn't taxed anymore from your income. Chances are they're going to start doing that as well. What I hope they never do, but is absolutely on the table, they are projecting that it is possible that the retirement benefit that Social Security is paying out to everybody could be reduced by 15%, 20% or so. So you have to be very, very careful, which is why it's important that you never just count on one thing. You never just count on, oh, your job, it's always going to be there. You're going to be able to work to the day that you die. You don't know that. You don't know if that company's even going to be around or if AI replaced it. Oh, you're going to be able to do this and do that. No assumptions. You have to hope for the best, but plan for the worst. And if you can make it when the worst happens, the best, if that's what happens, is going to be really good.
And that's why she is who she is. You wrapped that up beautifully, Suze Orman. You're an inspiration to all of us. How you have just made it your business, your entire life, helping others, moving ahead in the world of finance, personal finance expert, helping folks with your podcast. Suze Orman's host of the Women and Money podcast. Everyone smart enough to listen. That's who it's for. It is wonderful to see you, Suze Orman. Thank you so much for being with us from her waitress days to now helping everybody around the globe. We really appreciate it. Thank you for your time. Great to see you.
Thanks, girlfriend. Take care, everybody. Bye.
And thank you for joining us here on Market Overtime. Be sure to download the Schwab Network app and tune in for all your market news 24/7, schwabnetwork.com. I'm Nicole Petallides. Thanks for being with us.